In this recording, I'm going to be working through the mock test Excel Limited. Please make sure that you have attempted this question under exam conditions before watching the recording.
All right, guys, so first we have 15 minutes to work through the information provided in the scenario. And we've been given information relating to Excel Limited, or Excel. And Excel has been a proud provider of preschool and school-based education since 1996, and they listed on the Johannesburg Securities Exchange in 2009. They are currently the largest for-profit independent school group in South Africa, providing education services to approximately 42,000 learners in 120 schools across the country. All right, so we are dealing with a company that provides preschool and school-based education, so all the way from nursery school right up to matric. We are then given some financial information relating to Excel for the year ended 31 December. So you can see you've been given the earnings per share and also the share price for 2019 and for 2018. You are then provided with information relating to a potential acquisition. Excel is interested in entering the post-school education environment, and Prestige Pty Limited, or Prestige, has been identified as a potential acquisition target. Prestige is committed to empowering the nation by widening access to higher education and has diverse offerings including undergraduate and postgraduate qualifications. So the undergraduate qualifications include higher certificates, diplomas and degrees, and the postgraduate qualifications include honours, masters and doctoral degrees. All right, so we are now dealing with a university. So obviously if Excel manages to purchase Prestige, they will then be able to provide education all the way from preschool right up to university level. The university strives to ensure that their graduates are marketable, immediately employable, and equipped with the appropriate skills for the 21st century to foster ethical independence, critical thinking, and entrepreneurship. All right, so that's what they strive for. And they have diverse offerings. So we saw they have different undergraduate and postgraduate qualifications. You then have some financial information relating to Prestige for the year ended 31 December. So first here we have an extract from the statement of profit or loss and other comprehensive income. So you can see you've been given this financial information for 3 years, for 2019, 2018 and 2017. So let's go and see what we've been given in the notes. So in note 1 we have more information relating to operating profit. And you're told that operating profit includes the following. Equipment with a book value of 4.2 million rand was sold for 2.5 million on the 31st of October 2019. And then director salaries of 15.4 million in 2019, 15 million in 2018, and 14.2 million in 2017. And these salaries are 20% less than market-related salaries. Then in note 2, we are given additional information relating to finance costs. So the finance costs relate to interest paid on debentures. The debentures carry interest at a rate of 12% per annum. So guys, that is your coupon rate, which you would use to calculate your interest cash flow. And the debentures are redeemable on the 31st of December 2023 at par value. So we are dealing with a redeemable debenture. The pre-tax rate on similar debentures is 15%. So if that is the rate on similar debentures, that is the cost of debt. And remember, we use the cost of debt as our discount rate when calculating the market value. We then have some additional information. The market value of invested capital over EBIT, which is earnings before interest and tax. So you've been given the multiple of a JSE listed university, which is 12 as at the 31st of December 2019. All right, so we've got the multiple for a similar listed company, and obviously if we then need to perform a valuation for Prestige, we could potentially perform the valuation using this multiple. The listed university offers only undergraduate qualifications. So remember, we saw above, Prestige offers both undergrad and postgraduate qualifications. So the similar listed company has a narrower product offering. It's not as diverse. They only offer undergraduate qualifications. And you're also told that they have a lot more debt in their capital structure than what Prestige has. It's anticipated that a large number of Excel's high school students will attend university at Prestige, enhancing revenue for the group. All right, so we've got some revenue synergies over here. And the present value of these revenue synergies are expected to be 25 million rand. All right, and then that obviously makes sense because we know that Excel provides preschool and school-based education, so obviously if they acquire Prestige, they will now be able to offer education all the way from preschool right up to university. And that's obviously creating revenue synergies because students from Excel's high school will then attend the Prestige universities. We have legal costs relating to the acquisition, which are expected to be 420,000 Rand after tax. And this is based on a recent quote for a similar industry transaction. We also have due diligence costs, which are expected to be 650,000 Rand after tax. And this is also based on a recent quote for a similar industry transaction. And the corporate tax rate is 28%. All right, so that's all of the information that you've been provided with in the scenario.